Officers Adda 247 YouTube class, and heartily welcome to all the bankers in this lovely session. I'm just certain about that most of our colleagues and bankers just started your preparation for the upcoming examination of the JIB, which is scheduled in the June month, right? So, the one request I would like to say, just use your pen and paper while we are just going to solve a multiple MCQs in this session, okay? So the benefit of this lecture that you are going to get a multiple MCQs from the different chapters of the module C. That means you are going to know anything from from each chapter, okay? So that means this is a very important session. So hit the like button, and before to begin, I would like to say, if you're new on the Officers at 247, just subscribe the channel so that you can get the regular update from our side, and download the Adda 247 application so that you can get everything at a one place, okay? So let's start today's class, and I just want 100% participation from everyone in this session, right? So let's start. So this is your question number one, and I just want that everyone should participate in these MCQs, okay? And just quickly tell me what would be the answer of this while I'm just solving this question as well, because time is very less, right? So just understand what is the question given, like the current ratio is given, quick ratio is given, inventories are given, and we have to calculate the amount of the current asset, right? So just quickly tell me what would be the answer of this. And one more update I would like to say, that our target batch is just started, and you can just enroll in that. And after after just completing the 10 MCQs, just please try to just understand what I am just trying to explain you about the batches, right? So just tell me what would be the answer of this question, like the current ratio is given, quick ratio is given, how to calculate this. And this kind of the question you may get in the examination in the 2 marks. So let's understand this. Whenever we talk about the current ratio, what we understand by the current ratio, when we talk about the current ratio, that exactly about the current asset, and it is divided by the current liabilities, right? And the ratio is given the 4:1. All right. So what it means, that current asset, the very first equation what you write here, that is current ratio is equal to current asset, and it is divided by the current liability, it is equal to the 4:1, okay? Now if I talk about what we understand by the quick ratio, anybody can tell me what we just know about the quick ratio. That is your quick asset, and it is divided by the current liabilities, not the quick liabilities, because in accounting we just often assume that quick liabilities is equal to current liabilities, okay? So we just write, instead of the quick liability, we write the current liability, and that is the formula for the quick ratio as well, okay? So now what we have to write here, that is 2.5, that is to divided by the 1, right? Now if I say what we have to calculate here, if you know that the inventories is given 22,500, and the one more important thing, that whatever the questions I am taking, that is a very good kind of the questions. So please just try to understand these questions in a very proper way, right? So I just want to tell you that whenever we talk about the inventories, you can understand the inventories is the only part of your current asset, but not is the quick asset. That means inventories that we understand as in stock, okay? So inventory is a current asset, not a quick asset, right? So now what we have to understand from these informations, whatever the given, we have to calculate the current asset, right? We have to calculate this value. So just tell me here that we know that the inventories is the current asset but not the quick asset. So we can also understand as, like, we can also just write as a quick asset, that would be equal to the current asset minus 22,500, isn't it? We can just write it like this way, because we know that the inventories is the current asset. And whenever we talk about the assets, so in the assets, you are going to calculate for the current asset, and you are also just talking about the quick asset, and we know that, like, the information that is provided in the question. So you can understand here that we have to calculate the current asset. So we, with the help of this information, we can just calculate the current asset. Now just tell me what would be the answer of this question. So now, like, from these information, or say from this information, what we can derive, look, in this information we can derive the current liabilities, and your current liabilities, that would be equal to what? Quick asset, and it would be divided by the 2.5, isn't it? Okay. So this is now, this value we have to put here in this equation. This is equation 1, just right here. So if we just write this like if we just going to put this here, so you can understand this is current asset. Now the current liability, that would be equal to the quick asset, and 2.5 that go into the numerator side. Okay, so we can also just write that would be the 4 divided by 2.5. Okay, now if we have to further solve this, so this will become the 8 divided by the 5, and that would be the current asset is current ratio, current asset is divided by the quick asset, and the ratio that would be the 8 is to 5. Okay, now what we have to do, just try to understand, because this is a very important question. If you understand that multiple questions you automatically going to solve in the examination, right? So now what we have to do here, we have to just put the value of the quick asset, which is we derived here, that is quick asset is equal to current asset minus 22,500, and that would be equal to the 8 by 5. Okay, now that would be now if we further going to solve this, this would become the 8 multiplied by the current account, and this will become the yes 1,80,000, right? So now if we further going to solve this, this would become the 3 multiplication of the current account, and that would become the 1,80,000 rupees. That means the current asset value, that would become the 60,000 rupees, and that would be your answer A. I'm hoping that everyone just understood this. Okay, so this is how we actually solve the questions of the accounting. And does the, if you just understand, the basic concept behind every question, then you can understand only the question changes, not the concept. Okay, only you can get the different questions from the same concept. Okay, so I'm just expecting that everyone just understood this question. Okay, and you can also understand like if you just not understood by the one like the one go, so you can also watch after this completing this session. Okay, so now just understand another question and tell me what would be the answer of this question. Like the net profit ratio shows the relation between the net profit and what. Okay, whenever we talk about for an organization, what we understand by the net profit, anybody can tell me what we understand by the net profit? Whenever we talk about the net profit, you can understand like the company is generating, or business is generating the profit after deducting all its operating expenses, all the tax expenses. Okay, so after the profit, like the generating the profit, also generating the revenue after deducting all the operating expenses, all the taxes, so that profit is known as your net profit. And whenever we talk about the net profit ratio, so you can understand net profit ratio is just a net profit, and it would be divided by the net sales. And because you are talking about the ratio, so you can also just multiply by the 100, but it is not just required. You only have to understand that net profit is divided by the net sales, so the correct answer, that would be the second. Okay, I'm hoping that we just understood this. And before to further, because like I'm getting a so much less here, so just hit the like button, guys, hit the like button here. Okay, so now we are moving for the third question. The third question is that the shareholders funds consist of and the multiple options are given. Okay, so just tell me what would be the answer of this question as well. Whenever we talk about for any companies, okay, and we talk about the shareholders fund, so you can understand the shareholders fund, we often just going to understand when we are going to understand a chapter where like the preparation of the final account, where we are going to understand how to prepare the balance sheet of the company. Okay, and in the balance sheet of the company, we are going to understand the liabilities, assets, and that's all things. Okay, so where we are going to understand the shareholders fund, like under the shareholders fund, what like shareholder funds, what consist. Okay, so you can understand the shareholders fund, yes, that is the correct answer, that is a D, that all of the above. So shareholder funds that consist of the preference share, equity shares, and reserves and surplus. Okay, that all things the shareholders funds, you can understand that consist of preference shares, equity shares, reserves, and surplus also here. Okay, right, I'm hoping that everyone just understanding this, right? Now just try to tell me what would be the answer of the next question. A statement of assets, liabilities, and equities of a business and it is prepared to show the financial position of a company at a particular date is known as. And whatever the statement is given here about the balance sheet, okay, you can understand whatever the statement is given, you can now understand like where we are going to just make this statement, like the asset, liabilities and equities. You can understand we are just going to make the statement in the balance sheet of a company. And my dear friend, one question you may get from this, like from this statement as well, because this statement is a very important, okay. So you can understand whenever we talk about the balance sheet, so you may get the question in the examination, like balance sheet describe, or say balance sheet of any company describe what. So you can tell that describing the financial position of any business, of any company, okay. So you can understand whenever we're talking about the statement of the assets, liabilities and equities of a business, and it is prepared to show the financial position of a company at a particular date. And this is also very important, because sometimes we are going to get the question like this, like balance sheet is prepared, and like the time period is given, like the for the financial, you can understand like during the time period at, or say on a random day, you can understand at a particular date. So balance sheet is just prepared at a particular date, and that's why it is just when we just prepare the balance sheet, we will just write as on date, okay. We will just write as on date, and as on date, like whatever the on the date the balance sheet is going to prepare. So a statement of the assets, liabilities and equities of the business, and it is prepared to show the financial position of the company at a particular date, and it is known as the balance sheet. So that is a very important question. I'm hoping that everyone just understand this, okay. So now just tell me what would be the answer of this, the question number fifth. Just quickly tell me what would be the answer of this, like liquidity ratio. What we understand by the liquidity ratio? In the liquidity ratio, we understand the very important ratio, current ratio. We read the quick ratio. Okay, that ratios we actually understand, and these two are, main important liquidity ratio that you are going to understand in the ratio analysis chapter. Okay, so whenever we're talking about the liquidity ratio, that indicates what? Like that indicates the ability of the company to meet its what? Like short-term obligation. You can understand the liquidity ratio. Whenever we are talking about the liquidity ratio, that actually describing the short-term obligations of the company, okay. You can often just going to understand what we understand by the current asset, what we understand by the current liability, what we understand by the quick asset, okay. That means if you're just reading this ratios in the liquidity ratio, so that means you can just want to know that how, like companies liquidity, okay, like companies liquidity power, right. So that indicates the short term obligations, like companies ability to meet its short term obligations, that indicate by the liquidity ratio. There are multiple liquidity ratio you are going to read in the ratio analysis chapter, okay. And if you just watch my sessions, watch my if you just enroll in my batches, right. So where you just you just do not need to memorize, I often said, and I just explain you like how you can just easily solve the questions of the ratio analysis chapter in the examination. Okay, so I'm hoping that everyone just understanding this. And the liquidity ratio, now you can understand the liquidity ratio indicates the ability of the company to meet its the short term obligations, and that would be the correct answer for this question, okay. Okay, so now just understand the another question. Tell me what would be the answer of this. A business entity has net sales more than its cost of sales. Whenever we are talking about the cost of sales, you can understand the cost of sales is nothing but a cost of goods sold. Okay, so I can understand here that most of our colleagues just know about what is the cost of goods sold, because it is just looking so heavy term, right? So cost of goods sold, you can understand that is a cost of sales. So a business entity has net sales more than its cost of sales, so it will result into what? Just tell me what would be the answer of this question. Yes, that's correct. The correct answer, that is A. Okay, so that is A, that you can understand the gross profit. The correct answer, that is a gross profit. So gross profit, you can understand the gross profit is equal to your net sales minus cost of sales. Now if I ask you that why we have written that, like the net sales minus cost sales, that you can understand whenever we're talking about the gross profit, you can understand the gross profit is equal to the net sales minus cost of sales, or say you can also understand the cost of goods sold. So gross profit, and this is a very important because this is, I just saw the multiple sessions of the JIB. So where I just saw that the like gross profit question is always come, right? So that you have to know like how to solve this kind of the question. So in the next session we also just going to solve the questions of the cost of goods sold. In the previous session we discussed the how to solve the questions of the cost of goods sold. In the next session we also just going to do. So if you just know that how to solve the questions of the cost of goods sold, then the gross profit question you can easily do in the examination, right? Okay, so gross profit, that would be equal to what? That would be equal to the net sales minus cost of sales, or you can also understand the cost of goods sold. Okay, so I'm hoping that everyone just understand this. Okay, now just tell me what would the answer of this. Now again, this is a numerical and you are going to understand a very important points from this question. Don't be confused whenever you are getting the term that is liquid ratio. You can understand that here you have to calculate the quick ratio. Okay, so liquid ratio or say quick ratio. So here you have to calculate the quick ratio. So just tell me what would be the answer of this question. Calculate liquid ratio from the following information, and the informations are given. So can anybody tell me what would be the answer of this? When we talk about that, we have to calculate the quick ratio. So the very important thing that you should know the formula for the quick ratio. So quick ratio formula, that is quick asset, yes, and that is divided by the current liability, not the quick liability. And that is a very important thing you have to memorize. Okay, now I think everyone just memorize this, that the formula for the quick ratio. So now we have to just find out here quick ratio. So how to calculate this? So when we talk about that, we have to just calculate the quick asset. So you can understand that here the given information is given, and the quick asset we are not finding anywhere in the particular informations, right? So now what we understand by the quick asset, so you can just write here that is quick asset. Now you can understand the current asset is given, okay, and the current liabilities are given. So that would definitely go into the denominator side. Now we are talking about the quick asset we have to find out here. So the current asset is given the 80,000 rupees. Just write here the current asset that is given the 80,000 rupees. Now inventory the current asset. Okay, so you can understand actually the information is little the information is provided here, some mistakes there. You can understand there would be given as a total asset, not a current asset. Okay, so that is given the total asset. So I think that is a problem. That's why I'm not getting the answer from everyone here. So now just tell me what would be the answer of this. From the, like, instead of the current asset there should be the total asset. Okay, so now you can know that the total asset, whenever we talk about the total asset, you can understand the total asset, that is the summation of the current asset and the quick asset. Okay, so now if I ask you that what would be the quick asset here, so you can understand the quick asset, that would be total asset minus the current asset. Now you can understand the inventories are the current asset, not the quick asset. Advanced tax is the current asset, not the quick asset. Prepaid expenses is the current asset, not the quick asset. So now the only thing that you have to just write 20,000 plus 5,000 plus 5,000. Okay, so that would be equal to your what? That would be equal to your 50,000, right? So that would be the value of the quick asset. Now what would be the value, what would be the form, what would be the ratio if we have to find out? So quick ratio, that would be equal to the quick asset divided by the current liabilities. So you can understand here the quick asset value, that is 50,000, and the current liabilities value, that is 50,000. So your answer, that would be equal to the 1:1. That would be your answer for this question. So that's how we solve the questions of the your accounting subject. Okay, and this is a very important chapter. The ratio analysis chapter is a very important chapter of the module C. Okay, now the just again a very important question, that which of the following is not included in the tangible fixed asset. So there are multiple options are given, and you have to tell what the asset is given is not the including in the tangible asset. So whenever we're talking about the tangible, that means those assets, that having the physical existence, or you can also understand that you can touch the asset. Okay, so when you can just touch the asset, then all the asset is known as a tangible asset, and we are talking about the fixed asset, right? So the lands and building is also you can just touch and you can understand this is a tangible asset. Machinery and plant, that is also can be understandable as a tangible fixed asset. Vehicles and office equipment, that also can be understandable as a tangible asset. But your brand and logo is not that tangible, it is your intangible asset. Okay, so what would be the answer of this? Like you have to just find out here what like from the following options, like which option is not the tangible fixed asset. So you can just understand the option number D here, that is brand and logo, that would not be the part of your tangible fixed asset. Okay, so the correct answer, that would be the brand and logo, right? So I'm hoping that we're just understanding this, that would be the correct answer for this, because this is considered as your intangible asset. Okay, so brand and logo, that is considered as an intangible asset. Now the next question, that is which of the following items is shown under the head known as a current liability? So whenever we're talking about the current liability, what we understand by that, whenever we're talking about the current liability, you can understand the current liability is understandable as your short-term obligations, or say short-term liabilities, right? So what we understand by the current liabilities, that is short-term obligations, or you can also understand the short-term liabilities, and that you can understand by the current liability. So now what you can just tell me here, that which of the following item is shown under the head known as current liabilities? So the correct answer, that would be the short term liabilities. Okay, if I just ask you like which of the following option is known as a non-current liability, so your answer, that should be the non-current. If there is a non-current, so you can understand that the liability you have to pay beyond 1 year. Okay, and that is considered as a long-term liability for the company. Okay, so the correct answer for this question, that is short-term liability, right? So this is how we actually solve the questions of the accounting in the examination. Okay, now this question is from the your chapter of the computerized accounting, and that is also very important chapter. There are some, you have to just understand the some MCQs there for just understanding this. So whenever we talk about like which of the following is not an advantage of the computerized accounting, so the multiple options are given here, like high reliability, high speed, high cost, high security of the data. So which option you should have choose here? So, like, I think just tell me what would be the answer of this question. Like, which one of the following is not an advantage? That means you have to tell here that disadvantage for the computerized accounting. Which one of the following is the disadvantage of the computerized accounting? When we talk about the advantages, high reliability, high speed, and high security of the data. But high cost is a something that is considered as a disadvantage for this computerized accounting. So your answer, that would be the C here. Okay, so I'm hoping that everyone just understood this here. Okay, so now just tell me how many marks everyone just got in this 10 MCQs. And if you just got the 7 to 8 marks in this 10 MCQs, that means you are going good. Your preparation is is a level, like good level, your preparation is going on. So now I just want to the very first thing, that just hit the like button, okay, on this video, and just share this video to your friends, to your colleagues, so that maximum number of our bankers can join further in our sessions. Okay, now just I just want to tell you that our target batches is started. Only few classes that has been started, and still you can just enroll in our batches. So where you are going to get a very big discount with this code, that is Y422. And the very advantage of this code, that Y422, that you are going to get the discount on the mock test, or on the ebooks, as well as the JIB classes, for as well as the CIB classes. Okay, for all things you are going to get the big discount for with this code buy 422. And if I talk about like JIB Mahapack, CIB Mahapack, JIB CIB ka Mahapack, where you are going to get the very good validity, like 6 months, 12-month validity. That means this code will very helpful for you. Like by this code, you are going to get every batch at a very minimal price, very minimal price. Okay, so just try once by your site. Okay, and in by this batches, you are going to get like the recorded lectures as well as the live classes that regularly done by us. Okay, and by this batches you can get a perfect quality content. And the very important thing that we are not going to prepare you for only 50 marks there. We are prepare you for the 70 plus 80 plus marks, and that is a very important thing for this batches. And the very important thing that for you, like before and after banking hours, you just have to think like from where to start, to where we have to end, like all the syllabus, all the chapters. So by enrolling in this batches, you just do not need to worry about anything, because whatever the content that is delivered by us, that all based on your fully exam oriented classes that you are going to take there, that you are going to take there. Okay, and the very important thing, after live classes you also get that videos in the recorded form. So that is also very good thing for this kind of the batches. Okay, so and you can also enroll in the multiple, you can also just enroll in the like individual batches by this code, right? So now just hit the like button and just share this video to your friends, to your colleagues, and subscribe the channel so that you can get regular update from our side. And thank you everyone for joining me in this session. Now we'll meet on the tomorrow at the same time.